Hey everyone, and welcome to today's Deep Dive, where we're going to break down the latest business and finance news. We're using today's Paste-to-Text News Roundup as our source, and think of this deep dive as your personalized briefing on what's really moving these markets. We'll cover everything from Boeing potentially ending their strike to what it all means for the future of labor. Oh, and we can't forget Warren Buffett's surprising investment strategy amidst all this market uncertainty.
Wow, that does sound like a lot to unpack. But I'm ready if you are.
All right, let's jump right in. First things first, we got to set the scene. Wall Street futures are up, but we're definitely seeing some election jitters, though thankfully it's not quite the roller coaster we all saw back in 2020.
Right, and that's where things get really interesting when we look at the VIX, or the CBOE Volatility Index, if you want to get technical. It basically measures how volatile the market thinks things will get over the next 30 days. And right now it's high, but not quite panic levels, if that makes sense. So it seems investors are being cautious, as you'd expect right before an election. But they're not hitting that sell button en masse just yet. What do you think this suggests about how much they trust the overall system? That's a good question. It's almost like they're saying they trust the process no matter who wins. That's one way to interpret it for sure. The market seems to be saying that our economy's foundation is solid enough to handle any potential political storms, which is interesting because that contrasts with how everyone on Main Street seems to be feeling. Folks seem a lot more anxious out there. But anyways, before we move on, we should touch on the international markets quickly. European shares are pretty much flat today. Asian markets are mixed. Oil prices are going up a little, and gold staying stable.
So it sounds like everyone's in wait-and-see mode. But let's get down to specifics. Starting with Boeing. Their 7-week strike could finally be over if this new wage deal goes through. And get this, they're offering a 38% increase over 4 years. That's huge.
Yeah, it is, especially compared to what they initially offered. This really shows you how in-demand skilled labor is right now. And maybe it's Boeing realizing how disruptive this whole strike has been. This potential settlement really makes you think about the future of these labor negotiations. It's not just about wages anymore. It's about respect, work-life balance, and feeling like your voice matters.
Absolutely. I've seen some sources say workers are ready to sign while others want to hold out for even more. What do you make of this divide?
It's pretty interesting, Rob. It's like this battle between wanting to take a good deal now versus hoping for more fundamental changes in the workplace. What I find interesting is that this isn't just happening at Boeing. We're seeing similar situations pop up everywhere, from healthcare to education. It could be a sign that workers overall are demanding more from their employers. And any company that doesn't adapt could have trouble attracting and keeping talent in the future. It'll be interesting to see how this all plays out.
It really will. Speaking of adapting, let's talk about Warren Buffett. Berkshire Hathaway is sitting on a record $325 billion in cash. Honestly, that sounds made up.
It's a crazy amount of capital, for sure.
Yeah.
And when you consider that they sold some of their Apple stock and didn't buy back any of their own for the first time in years, well, it says a lot.
So what's the Oracle of Omaha thinking? Is he predicting the market's going to take a nosedive?
Well, he's definitely being cautious. Holding back on major investments like this could mean he thinks the market's overvalued right now, or that there will be better opportunities down the road. Or maybe he sees some sectors he likes, but the prices are just too high at the moment. But think about what this could mean for you. Buffett is all about that long-term vision. So could his strategy teach us anything about how to handle this uncertainty, especially with the election coming up?
That's a really interesting point. It's wild to see how different Buffett's approach is compared to someone like Blackstone. They're actually pushing ahead with their European expansion plans despite all this uncertainty. They're targeting wealthy individuals in new markets and lowering those investment thresholds so they can reach more people.
It's a bold move. For years, private equity firms like Blackstone have mostly focused on those institutional investors. But now they're realizing that there's a growing number of wealthy individuals, and they see it as a big opportunity. This raises some interesting questions about the future of investing, though. Are we about to see private equity become more accessible to everyday people? Will these individual investors have access to the same opportunities as those big institutions?
Maybe, but breaking into Europe isn't easy. It's not one big unified market like the US. Each country has its own regulations, and what investors prefer varies a lot.
Exactly. Like take the UK, for example. They've been a tough market for Blackstone to crack. Their regulations are stricter than in France or Italy when it comes to protecting investors and being transparent. And Blackstone has had a lot more success in France and Italy. This just goes to show how hard it is to navigate all those different legal and cultural differences.
Navigating seems to be the theme of the day, huh? especially for tech companies who are under more and more scrutiny, like Apple and their iPad OS. The EU is questioning whether it complies with their tech rules.
This isn't just a one-off thing. This scrutiny on Apple is part of a global trend where governments are trying to rein in big tech, make sure they're playing by the rules. We're seeing the same push for regulation in the US, China, and pretty much everywhere. But what's interesting is that these attempts to regulate often have unintended consequences. Remember Amazon's plan to power one of their data centers with a nuclear plant?
Oh yeah, that was a big idea. Didn't it get shut down though?
It did. The regulators, FERC in this case, were worried about consumers having to pay higher power bills. And they were also concerned about the stability of the power grid.
This whole data center energy thing raises so many questions. I mean, as we rely on data more and more, how do we make sure these power-hungry centers are sustainable and reliable? It's a tough problem tech companies and governments are trying to solve all over the world. But speaking of global, we can't ignore what's going on outside the US. We talked about how European markets are kind of flat and Asian markets are mixed. What's behind all this caution?
Well, it's a lot of different things all mixed together, really. There's still that worry about inflation and the possibility of a recession in some of the bigger economies. Plus, the war in Ukraine is still messing up global supply chains and energy markets. And then there's China's economy slowing down, which is affecting everyone. Oh, and you can't forget about the psychological impact of this U.S. election coming up. Investors tend to play it safe when things are politically uncertain.
Yeah, that makes sense. But uncertainty doesn't seem to be bothering companies like Blackstone much, at least not when it comes to their European expansion. We were talking about how they're having more success in some countries than others. Why do you think that is?
Well, like we said earlier, each European country has its own rules, and investors have different tastes. What works in France might not work in the UK. Blackstone has been doing really well in France and Italy. People there are more open to alternative investments, and maybe the rules for private equity aren't as strict there. The UK, on the other hand, tends to be more careful about private equity. They have tighter rules about protecting investors and making sure everything's transparent.
So it's not just about finding the right investors, it's about figuring out the ins and outs of each market and adjusting your approach. But Blackstone isn't the only company with global ambitions. Remember Ryanair, the budget airline? They want to be Europe's version of Southwest.
Oh yeah, Ryanair. They're famous for their no-frills approach and their CEO who's always saying something interesting.
Exactly. But they've had to scale back how much they think they'll grow next year. All because of those Boeing delivery delays.
Right, those strike ripple effects are hitting the whole aviation industry. And it's not just the delays either. Ryanair is also dealing with lower fares, especially after a not-so-great summer travel season.
So they're getting hit from both sides. Fewer planes and cheaper tickets. How are they planning to deal with all this turbulence?
They're hoping fares will level out in the next few months, and they're really focused on keeping their costs low, which is super important when you're competing with other budget airlines.
That makes sense. But while Ryanair is trying to ride out the storm, other companies are facing different kinds of storms. Legal ones. Remember Franchise Group going bankrupt and B. Riley Financial losing money? Well, turns out they weren't the only ones who got hurt.
Yeah, the co-CEO of B. Riley said that everyone involved is probably facing losses. It shows you how connected everything is in finance, and how one company going under can trigger a chain reaction.
That's a sobering thought. It really highlights why diversification is so important and why you need to understand the risks, especially in a market like this.
Absolutely. And speaking of volatility, let's shift gears to tech, where some big names like Alphabet, Equinix, and Meta are worried about a new law in Vietnam.
What's going on over there?
Well, the Vietnamese government is proposing new data protection rules. That would limit how data can be transferred to other countries. These tech giants are worried that these restrictions will stifle their growth in Vietnam and make it harder for them to serve their customers.
It's another example of that global tug-of-war we're seeing between governments trying to protect their citizens' data and tech companies wanting to operate freely across borders. Finding the right balance is so crucial. We need to protect privacy without stopping innovation.
You got it. And this debate isn't going away anytime soon.
Now, while some tech companies are fighting regulations, others are dealing with accusations of doing something wrong. Remember Braskem, the Brazilian petrochemical company?
Yeah, the one connected to that sinking ground in Maceo.
Yeah.
It's a terrible situation. And it raises serious questions about how responsible companies are and how they're held accountable for what they do to the environment.
Right. The police are accusing them of pollution, damaging public property, and even filing false reports.
It's a stark reminder that companies need to operate ethically and sustainably, not just for their profits, but for the well-being of communities and the planet.
Could agree more. Now let's zoom back out to the market as a whole and revisit Warren Buffett and Berkshire Hathaway. We already talked about their mountain of cash, but their latest earnings report has some interesting details. Their operating profit actually dropped by 6% this quarter.
That's right. It seems even Berkshire Hathaway isn't immune to all these economic headwinds. The drop in profit could be from a few things, like inflation, supply chain problems, and people spending less.
Interesting. But what's amazing is that even with profits down, Berkshire's Class A shares are still trading at a premium. What do you make of that?
It shows you how much faith the market has in Warren Buffett's long-term investment strategy. Investors believe Berkshire will get through this just like they always have, and come out stronger on the other side. It's like they're saying, we trust the Oracle.
That's a pretty powerful vote of confidence. Speaking of confidence, let's talk about a company that seems to have a lot of it. Eni, the Italian energy giant. They just finished selling their Alaskan oil assets to Hilcorp for $1 billion.
Yep, it's a strategic move. Eni is streamlining their portfolio, focusing on their core businesses and trying to reduce their carbon footprint. They're also planning to reinvest that money into renewable energy.
Smart move. They're aligning themselves with the global shift towards clean energy and strengthening their financial position at the same time. They're aiming to raise a total of 8 billion euros from selling assets, and it looks like they'll hit that target by next year. They're not just talking the talk, they're walking the walk.
Exactly. They're showing they're committed to their strategy, and they're putting it into action effectively.
Meanwhile, Blackstone is busy growing their portfolio by buying up other companies. Remember we mentioned they might buy Retail Opportunity Investments Corp, the shopping center REIT.
Yeah, it looks like that deal's moving forward. Apparently, Blackstone is in serious talks to buy them for $3.4 billion.
That's a big bet on brick-and-mortar retail, especially now when online shopping is so dominant. What do you think they see in this deal?
Well, Blackstone is known for making investments that go against the grain. They often see opportunities where others only see problems. They might be betting that physical stores still have a future, especially as people crave those in-person experiences and that sense of community.
It'll be interesting to see how this all plays out. The retail world is constantly changing, and only time will tell if this gamble pays off.
Speaking of gambles, Apple is facing a bunch of challenges right now, from regulatory scrutiny in Europe to labor issues in the U.S.
That's true. The EU is looking closely at their iPad OS to make sure it follows their tech rules. And here in the U.S., the National Labor Relations Board has accused Apple of trying to silence employees who are talking about pay equity.
Those are serious accusations. It suggests they might have a culture of secrecy, and that they might not be respecting workers' rights.
It's definitely different from how Apple presents themselves. As a progressive company that cares about its employees, they're also in legal trouble for allegedly harassing a couple who ran an online newsletter that criticized Apple. A judge recently ruled that the couple can sue for punitive damages.
It's a reminder that even the biggest companies have to be held accountable for their actions.
So true. Now, while Apple's facing some headwinds, NVIDIA is soaring. They're going to replace Intel on the Dow Jones Industrial Average, which is a huge deal for the chip-making giant.
It's a symbolic win for NVIDIA, and it shows how much they dominate the semiconductor market, especially their success in artificial intelligence. It reflects how the tech industry is changing, with AI and data-centric companies becoming more and more important.
Their success is also attracting attention from other companies in the industry. NVIDIA's CEO recently urged SK Hynix, a major memory chip supplier, to speed up their production of next-generation chips. It shows you how ambitious NVIDIA is and how determined they are to stay ahead in this rapidly changing market.
Definitely. They're not just sitting back and relaxing. They're always innovating and pushing the limits of what's possible.
Speaking of innovation, let's talk about electric vehicles. NIO, a Chinese EV maker, just got approval to build a third factory in China. This will bump up their total production capacity to 1 million cars a year, almost as much as Tesla's Shanghai plant.
That's a big deal for NIO, and it shows how intense the competition is getting in the EV market, especially in China, which is the biggest EV market in the world.
It also shows how serious China is about becoming the global leader in electric vehicles. They're investing a lot in EV infrastructure, and they're giving incentives to both manufacturers and buyers.
Absolutely. China is playing the long game, and they're making good progress. But while NIO is ramping up production, Tesla, the current EV king, has seen their sales in China dip a little.
Yeah, they sold 68,280 China-made EVs in October, which is 5.3% less than last year.
That drop could be because of a few things, including more competition from Chinese companies like BYD.
BYD is on fire. Their sales shot up by 66.2% in October, setting a new monthly record.
They're a major player in the EV market, both in China and more overseas.
While some companies are focused on growing and expanding, others are dealing with lawsuits. Meta and Nvidia are both trying to fight off securities fraud lawsuits. These cases could have a big impact on how accountable corporations are and investors' rights.
The Supreme Court is going to look at these cases, and their decision could make it harder for people to sue companies for misleading investors.
It's a complicated legal issue with big consequences, something investors should definitely be aware of.
For sure. It highlights why it's so important to do your research and understand the risks before you invest in anything.
We've covered a ton today, from how the markets are doing and what's going on in the world, to what companies are up to and the legal battles they're facing. It's been a whirlwind tour of everything that's shaping the global business world. But before we call it a day, let's take a look at some companies that are reporting their earnings today and see what their numbers tell us about how they're doing and what they're planning for the future.
Sounds good. Earnings reports are always a great way to see how companies are handling the current economic situation and what their plans are moving forward.
All right, first up is American International Group, or AIG, as most people know them. They're a big name in insurance.
Analysts are predicting they'll earn $1 per share for the third quarter. It'll be interesting to see how they dealt with the recent hurricane season and any other challenges they might face in the property and casualty insurance market. You know, natural disasters and crazy weather can really impact an insurance company's profits.
For sure. Speaking of industries facing uncertainty, let's move on to Diamondback Energy, an oil and gas company. Analysts are expecting them to report earnings of $3.99 per share. The energy sector has been all over the place this year, with oil prices going up and down, supply chain issues, and that ongoing shift to renewable energy. It'll be interesting to see how Diamondback is adapting to all these changes.
Absolutely. Their results will give us a good idea of how the oil and gas industry is doing right now and what we can expect in the coming months. And since we're talking about energy, let's look at Constellation Energy. Unlike Diamondback, they're all about nuclear power, which is becoming more popular as a cleaner option than fossil fuels.
Right. They're projected to report earnings of $2.64 per share. With everyone worried about climate change and wanting to reduce carbon emissions, nuclear power is making a comeback. It'll be interesting to see how Constellation is taking advantage of this renewed interest and if they think this growth will continue.
Definitely. Okay, switching gears to the tech world. NXP Semiconductors is expected to announce earnings of $3.43 per share. NXP is a major player in the semiconductor industry, which has been dealing with supply chain problems, geopolitical tensions, and fierce competition. How they're doing will be a good indication of the overall health of this super important industry.
For sure. And while we're on the topic of tech, let's not forget Palantir Technologies, the data analytics company. They're expected to report earnings of 9 cents per share. Palantir has been involved in some controversial projects, especially with government and defense agencies. Their results will probably be under the microscope, as people try to figure out how these projects are affecting their profits and what their future plans might be.
Their work with data analytics and artificial intelligence definitely makes them a company to watch. Now for something a little more fun, let's talk about Wynn Resorts. They run casinos and resorts mainly in Las Vegas and Macau. The gaming industry is really sensitive to how the economy is doing and how much people are spending.
True. Their earnings will give us some insight into whether people are still willing to spend money on travel and entertainment. Analysts think they'll report earnings of $1.01 per share. We'll see if they hit the jackpot.
We will. And last but not least, we have Zoetis. They're a global animal health company, and they're expected to report earnings of $1.46 per share. Zoetis is interesting because they're in an industry that's kind of protected from some of the economic problems we've been talking about.
Right. The animal health market is steadily growing because more and more people have pets and the demand for animal protein is increasing. People really love their pets, and that means steady income for companies like Zoetis.
It's a great example of how demographic trends and what consumers want can drive growth in certain sectors, even when the overall economy is uncertain.
So there you have it, a quick look at what some key companies are reporting today. And with that, it's time to wrap up this deep dive into the world of business and finance. We've explored a lot today, from market trends and what's happening around the world, to how companies are strategizing in the latest technological advancements. We always encourage you to keep learning about these topics, stay informed, and make decisions that align with your financial goals and what you believe in.
Remember, knowledge is power. especially in today's complex and ever-changing world. Stay curious, stay engaged, and we'll see you on our next deep dive.